Hello, Javed. Good morning, Clara, Javed. As you're logging in and as we're waiting for a few more people to join, if you could do me a favor and just post in where you're watching from, that'd be super helpful for me. From Van, I'm in Vancouver, BC. Hopefully you're able to actually chat. That might be a setting I need to make sure. So someone could find the chat and post where you are calling from. Javed has his hand raised. I'm gonna allow you to talk. Javed, are you able to
Yeah,
chat?
no, I can. I said I can use the Q&A, but I'm not able
Oh,
to send you anything on chat. It's
ah,
disabled.
perfect. Thank you so much. As you can tell, I'm not a normal Zoom user. I usually use Google Meet, so thank you for letting me know. While I have you, where are you calling in from today?
Oh, from Boston.
Okay, awesome. Thanks. Yes, I'll share the recording as well. I guess for now we can just use the Q&A. Let's see. I will send you back. Okay, we can use the Q&A and I'll watch that for anything. So thank you, Clara. You're in New York. Appreciate that. You are a few hours ahead of me. Thankfully, I have already had my coffee, so I should be fine. But I am, in fact, have COVID. So if I'm a little bit slow, hopefully that's why, and hopefully you wouldn't have noticed it, except for I told you. So we'll give everyone a couple more minutes here to get logged in, and then I will dive in. So the other thing I'd actually love for you to post in the Q&A for me is whether whether you're a first-time founder or not, and whether you have filed taxes before. And then I'll have one more question after that. So in the Q&A, go in and post, whether you're a first-time founder or whether you're an experienced founder, and whether you have filed taxes for a company before. So I'm checking the Q&A. First time, no. Okay, Clara, thank you. So Clara's a first time founder. Anybody else a first time founder here? I'll gear the conversation more toward a first time founder, unless I hear otherwise. So not seeing a lot of responses here. So I'll ask the final question before diving into the presentation. Can you post in the Q&A for me any questions? Somewhat first time, been a co-founder before, file tax. Okay, cool. Good news is C Corp generally is actually simpler than an S Corp. I had a tax practice where I focused mostly on S Corps, and I find them fun, but sometimes more complicated than a C Corp. Second time founder, first time was LLC. Got it. Thank you, Ramonique. Um, great. So while we're all here, appreciate you posting in. Can you post any either questions or expectations, what you want to get out of the next 45 minutes or hour? We have a small-ish group today, so I think that will work to your advantage. I'm happy to take as many questions as you have, and then if you post them now in the Q&A, I will actually be able to make sure I answer them Let me see if I can quickly come up with 8842. Um, Interesting. Yeah, the 8842 thing, I'll just answer that since I looked it up, is something that looks pretty specific for your situation. I don't know off the top of my head, so I probably need to spend time talking to you. I'm happy to have a follow-up call with anyone. I'll make sure that you have my calendar. Um, so that way you can talk to me. And then if you don't have a tax accountant, I'm assuming most of you don't have a tax accountant. Feel free to post in the Q&A if I'm wrong there. I can help you get connected to one. That's part of what we do here at Puzzle. So, okay, great. Need to understand basics. Good. That'll be good for you. How to file easily and something easy about deductions. Okay, cool. All right. Well, with all that, thank you for bearing with me on those questions as we all file in here. So I'm going to go ahead. Basic checklist. Okay, good. Yeah. And then I have all of your emails, so I'll also send a follow-up email with another checklist, but there is a slide that you'll want to screenshot. I'll send you the slides too, that has the basics of what you need to be providing. So I'm going to go ahead and share my presentation. Unfortunately, let's see what happens if I go like this. Okay, I'm going to ask for somebody. I wonder if I can see the Q&A here. Okay, in the Q&A. 409A evaluation. That probably is beyond the scope of what we'll talk about today, but I can again help you get connected with somebody who does 409As as well. So can somebody do me a favor and just post in the Q&A that you can see my screen since it's been a while since I've done a webinar and I want to make sure that you are actually seeing something meaningful. Yes, okay, thank you. Perfect. Okay, so the basic premise is year-end tax readiness. Certainly, you can ask me anything. I'll do my best to answer it. Like I said, we have a relatively small group today. Um, if I don't have the answer, I'm happy to do a little bit of research or connect you with somebody who just has it off the top of your head. So thanks again for joining today. We will share the recording. Here's some basic overview of what we'll cover. This is actually a presentation I do for some other venture fund portcos that is more of high level, what is accounting, but I made it more catered towards taxes as well here. So generally what is accounting, why and when is it important, and some FAQs here. So before I get started, I want to just share a little bit more about me and why you should listen to me. Essentially, I I'm an accountant. I've been a CPA in Washington State, and I was the first accountant at Bench.co. I had my own CPA and tax firm in Washington for about 5 years. I did mostly focus on S corporations and individuals like sole proprietor types. And then I was also a pilot before joining at Puzzle. So here at Puzzle, I'm head of customer success. But as you can tell by my background, I can really help with a lot of different things. Certainly, my primary goal is helping people get set up on Puzzle and making sure they're a raving fan and working well. Puzzle is a complete substitute for like a QuickBooks for especially for startups. But really anything related to your accounting and taxes, like I said, if I can't answer it, I can usually point you to somebody who can. And I do have the Q&A open here. I'll do my best to follow that. So post away in there as we go. So who has to do accounting? You set up a business, you have to do accounting. There's no questions about it. There's no exception if you're first year. Excuse me. There's no exception if you don't have revenue. There's no exception. If you aren't profitable, you need to file your taxes. This is this is a question where if you're trying to figure out a way to like weasel out of having to file, you probably shouldn't have started a business. It is one of those things that has like a low ROI initially, but sooner or later, not having filed on time will come back and haunt you, either in a fundraise or in a subsequent IRS notice. But I also want to cover some other things about that too. So, okay, more about why we're here. Obviously, we learned a lot of different things in our education. Um, Most of us well, in fact, it would be interesting if you posted any of you, uh, do you have an accounting degree or have you taken any accounting courses? That would be an interesting thing to see in the Q&A. Do you have an accounting degree or have you taken any accounting courses? I'm going to assume nobody has an accounting degree other than me, and nobody's taken accounting courses. Okay, so when we're talking about it took many. Okay, Clara, great. When we talk about accounting, we're really talking about a lot of different things. We already even this morning saw that with the 409A question. That is more of like fundraising evaluation, financial planning. That's typically where like a CFO comes in, and then taxes and IRS. What you don't even really see here, well, I guess on the left, accurate financial statements. These are all the inputs for the other stuff on the right. Okay. So when I went to school for accounting, I did not learn bookkeeping. We did have some QuickBooks courses, um, but really getting into the weeds on doing bank reconciliations and some categorization was not something that was part of the accounting curriculum. Bookkeeping is more of like an admin task that has very technical rules. Um, so it's something that you can do yourself. I wouldn't recommend it, in part because really good books make your tax filing and everything else super easy. It's very much a garbage in, garbage out type of a situation. And that means you really need to start with good bookkeeping. Bookkeeping and all of the other parts of accounting really come from all of these raw materials, if you will. So cash, from things like Mercury, if you have a Mercury account, spending might be from like a Ramp or a Brex, payroll, Gusto, Rippling, customer payments, of course, like Stripe, for example, and then bills in like Ramp or Bill.com. So those are the raw materials. How do they get transferred into financial statements? So the output of bookkeeping is financial statements. Um, Okay, Gina, take a quick pause here. I put this slide in here just to give you some basics about accounting, about taxes. These are usually questions I get asked. One, you probably don't owe taxes. You may and probably will owe franchise tax to Delaware. It's usually very low. If it's high, you may have done it incorrectly. You should absolutely account for out-of-pocket expenses. You should get credit for them. Usually it's like a reimbursement. You may need to file in multiple states. So if you have employees in more than one state, you probably need to file in more than one state. You need to manage your cap table. So as you are fundraising and adding shareholders, this is something that's really important and will be asked for by your tax accountant. And you could qualify for credits, but the trick there is you won't get a credit if you file late. So that's one of the biggest reasons to file on time. The R&D tax credit, they're cutting down on it a bit, but you could get $250,000, $500,000 in returns. And the credit is money directly to you, or offsetting actual tax owed. So again, the biggest one that I often get asked is if I fundraise, do I owe taxes? The answer is no on the fundraising. That is not revenue, and which does not go into accounting for your net income or your taxable income. Okay, so jumping back to, the basics of the raw materials and how they get turned into financial statements, you need a general ledger, an accounting system. So other systems aside from Puzzle would be like a QuickBooks, a Xero, NetSuite, Zoho. I mean, there are quite a few of these out there. We just happen to think that ours is the best, and the more modern one. But, if you're on a QuickBooks, you're on a Xero, that is an accounting system. What is not an accounting system? Excel. If you're on Excel, you need to get on an accounting system. There's no reason to reinvent it. There are certain rules that just work better in a true accounting system than in Excel. You can get by with it in the early days, but I want you to thrive and really be set up for the future to have your income statement, balance sheet, and cash flow statement all set up for you. So income statement. This is also called, anyone know what else you could call an income statement? I'm checking the Q&A here. What else would you call an income statement? Okay, I'll give you a hint. P&L. P&L stands for, anybody watching the Q&A here, it's for a period of time. So profit and loss. So that's over a month, over a quarter, over a year, whatever period you're reporting on. Whereas a balance sheet is a point in time. So it's status, progress, status, progress. So status is the point, the balance sheet. Progress is how far did we come in the last period that we're comparing. The other thing that often gets asked is about cash versus accrual. And most accounting systems and most accountants make you choose. This is one of the big differentiators with Puzzle is by default, we are optimizing for both cash reporting and accrual. The reason we're doing this is because accrual is real accounting, like pure accounting. If you talk to a CPA, they insist you must use accrual most of the time. If you're just filing taxes and more like tactical speaking, it's cash basis. So let me see, I think I have an example here. Usually cash basis is for small businesses. Accrual is for larger businesses. Let me see if I have an example on that. Okay. So what is cash basis? Cash basis is you record income when money comes in. Okay, so I make a sale of my software for the subscription for 12 months for $12,000, all paid up front, but it's for an annual contract on a cash basis. I recognize that revenue all the month I get the cash deposited. On an accrual revenue, we use what's called the matching principle to actually recognize the revenue over the period of time that the contract is. So that means $1,000 per month, as long as it's just by month and no other earning. So accrual is more smooth and evens out income and expenses, but cash is literally what you need to pay payroll, which is why it's important to have both. If you get to audits and like public, hopefully all you do, you'll need to be on accrual and even more so GAAP. Okay, I'm going to just explain a little bit more about, what a bookkeeper does, and then what an accountant does, what a controller does, what a CFO does. This is because we often say accounting and actually mean several different things. Uh, I like to think of accounting kind of like engineering or even a doctor or a medical doctor. There's different areas that people specialize in. So, like for me, I know a lot about startup tax and bookkeeping. I don't know a lot about GAAP accounting other than from what I studied in college and from what I had to do to pass the CPA exam. I wasn't like a public auditor other than a summer internship. That's a very different thing. And audits also can mean a lot of different things. A financial audit is something that you do uh, to report to your board and do more fundraising, and sometimes you are required to by the SEC. But you could also be audited by the IRS or any other state agency. Uh, okay, so bookkeeper, basic. They may not even have an accounting degree. I think of this more of as an admin thing, whereas an accountant is somebody who, may be doing your audit, maybe doing higher level work, maybe a tax person. A controller is more like if you've heard of revenue recognition or ASC 606 or accounting policies, they are literally in control of the financials. And I think of them very much as historically. So you notice I have the rear view mirror there. That is for all of the bookkeepers and accountants and controllers. They look backwards primarily. Maybe a controller does budget to actual. Um, Good question. Yes, everything, if you join Puzzle, everything would automatically be pulled in. I will point out Mercury Treasury, like most, uh, all Treasury accounts that I know of, don't automatically push all the transactions in part because Treasury accounts didn't matter when interest rates were close to zero. People weren't using them. So there just hasn't been as much tech or innovation to put things in their API. We have an API with Mercury. A direct integration with them actually. And we have a direct integration on their treasury account to pull their balances, but will need to manually input some stuff. The way we're approaching accounting and automation is human in the loop. So yes, we'll pull in everything from Brex. Yes, we'll do a best guess at categorization. But sometimes there's something because of the way you budgeted, or because of the way your tax accountant wants to see something, or because of the way um, you want to see something in a certain budget, really, you may want to categorize it differently. So we will automate the draft, and then it is still up to you to say, yes, I like this, or no, I want to make some changes to it. So we are doing our best to automate, especially around the higher level accrual stuff and even categorization. We use that's where some of our AI comes in, which I think is pretty novel and lovely. So happy to give you anyone a demo of that later. When it comes to this slide here, I talked mostly about bookkeeper, accountant, and controller. The CFO, I say they're the forward-looking people. You know, like where I went to college, finance was in a different college. It wasn't in the business college. It was in econ, and finance was totally separate. Meaning, uh, they live out of spreadsheets that don't really have to tie back to something that is as concrete. I say a CFO can be wrong and not get fired, whereas if a controller is wrong, they will get fired. Uh, and it's a little bit tongue in cheek, but point is, bookkeeper, you're going to notice all these things that a bookkeeper is doing. They're reconciling accounts, categorizing, reviewing financials, and then they may go to a controller to be reviewed, and then the CFO may use them to compare against forecasting and so on. All this stuff you notice uh, is an input into the financials, which then is an input into what you file your taxes on. So people often ask, how to file taxes cheap and quick. Um, it's really about being prepared. The cleaner and more organized you are with your financials, meaning have something more than just Excel or a Google Sheet, a listing of expenses are not financials. You want to have an accounting system set up. You want to make sure you've reviewed it. And also, I would say don't be overwhelmed or intimidated by reviewing your financials. Um, it's your company, it's your business. You need to make sure that you are actually taking a look at things because ultimately, the tax accountant does not provide any assurance on your books. They may catch obvious mistakes. They may inform you of like research and development credits or other credits that you might have, things that are deductible or not, but they don't actually audit your financials. An audit is like a technical term in accounting. They will look through your financials and see anything that's obviously incorrect. But there are a lot of like what are considered like garbage returns or garbage even tax shops who will just take whatever numbers you give them, even if they're written on a piece of paper, and they could file taxes on them. I do not suggest doing that. And the reason I'm belaboring this point is people think, oh, I have a tax accountant, I don't need a bookkeeper. That may be true, but I would still highly recommend almost at some point you're going to need a bookkeeper. And in the early days, especially if you have some funding at all, it's rather inexpensive. It's just worth it to have somebody managing that for you. Because then your financials will be good from the beginning, and then better for the tax account as well. You are ultimately responsible for the financials, even if you hire a tax accountant. If you paid for company expenses through personal funds prior to setting up a business, can we just account for those? And how would yeah, how do you pay it back properly? So this is a really common situation. Pretty much every founder has some sort of expenses before the company existed, even if it's just the incorporation cost. Then what you do, you essentially treat it like an employee reimbursement or an accounts payable of the company. So it's a liability of the company. They owe you. The company owes you. Remember the C corporation separate from you. There's a wall there. And then you just reimburse yourself whenever you get cash. It's really important to have all that information there, especially before you're doing fundraising. So it's really clear when a venture capitalists or investors looking at your financials that, hey, you put in $150,000 of your own money and you're going to want it back. That becomes part of your negotiation. So if you're raising $1 million and you didn't put in that you raised 150 or invested 150,000 of your own money in, and then all of a sudden you want it back, that's going to cause a lot of complications. Now, there is a possibility that you could just decide to leave the money in if you wanted to, you could, and that would count towards your basis in your stock, which would decrease your tax due later on. uh, when hopefully go public or, some big acquisition type of a thing. But the other way to put it in is just like an accounts payable that's like a little bit more of a long-term or notes payable. It gets really tricky when you have a debt or liability to like a significant shareholder and an entity. It's not considered at arm's length. Typically, an employee reimbursement or even accounts payable was something that you would repay within like a month or a year. If you are founding a company, you're putting your own money in, maybe it's more than a year. So you actually might want to go to your lawyer and ask for like some sort of a loan document and actually write up a loan that says, the company agrees to pay me, 5% or whatever interest rate you want, at a certain point. Because if you don't have any documentation, it could be deemed as not a loan later on. I don't see that being a huge problem and unlikely to happen. So I guess the point is, yes, track all the expenses in an Excel file. You can get them imported into something like a Puzzle or a QuickBooks, and then you just either pay them back at a later point or clearly note that it is owed back to you. Cool. Okay, I'm sort of flying along here. So feel free to ask more questions as we go. Um, why is accounting important? Um, essentially, one, when you're doing it well, you're keeping your business separate from personal. That doesn't mean you don't sometimes incur a business expense on your personal card. I would avoid trying to game the, credit card point system to get free travel all the time. Like there is no such thing as free. And what I mean by that is if you're spending a bunch of personal credit on a business expense, you're one, having to repeat a process to manually account for this. And two, you're not really honoring the corporate veil, meaning if you were audited, and especially if there was some sort of liability, like the company owes $1 million in taxes or, something went wrong and you were liable. If the whole reason you have a corporation is to protect you and investors from the liabilities of the company. So if you are routinely using either personal money for the business or business money for personal, that's even worse, then it could be deemed to have pierced the veil, and then you basically defeated the purpose of setting up the corporation to begin with. You should set up a proper accounting system. Hopefully sound like a broken record here. Excel, Google Sheets, not an accounting system. Brex is not an accounting system. FP&A tools, meaning like forecast, that's not an accounting system. You need a general ledger. File your taxes on time. I have some dates later on in the slides. Review your financials at least monthly. Highly, highly encourage you to do this. And you do not need to know accounting to do that. All you need is 15 minutes. You look through the line items and you circle things that don't make sense. Ask your bookkeeper to explain it to you. Ask your CFO, that sort of thing, and then manage your burn. So it's one of the things that we do is we automate your burn tracking in Puzzle. So that's something that ideally you have a pulse on every month and are never surprised. That way you can track your runway. Okay, shall I collect state tax for my customers' subscriptions that I charge them? Also, a customer is asking me for a W-9. Is that okay? Really good questions. W-9s, absolutely very typical. A lot of bigger companies, you will even find their W-9 just in a section on their website. Like it's like a static link for anyone to go pull for a vendor. You should also be requesting W-9s from anybody you're paying as a contractor because one of the most annoying but required things we have to do in January is 1099s. And the W-9 is like the W-4, if you remember the W-4 that you have to fill out to get on payroll. It gets all of your basic information to know where to send the W-2. So the W-9 for 1099s, W-4 for W-2s. Okay, state taxes for your customer subscriptions. That one is again, a little bit of it depends. I would, in this case, actually recommend that you work with a company like Zamp. I think it's zamp.com, started by ex tax file people, really smart, great, happy to make an introduction to them. They can help you understand where you need to be collecting and remitting sales tax. The the sales tax issue really does depend on which state you're registered in, which state you have employees, and which state you have sales. So it gets complicated pretty quickly. And then it depends on which threshold you enter. So I think, some states you have to have $100,000 of sales in before you are required to collect sales tax and remit it. But some have a lower threshold than that. It's called economic nexus. Um, is it okay to offer monthly stipends and reimbursements that aren't taxable in addition to base salary, like non-transportation? Oh, it's definitely okay to do that. I would just make sure that you're working closely with a tax accountant or referencing IRS practices. Um, something like a gym membership, I see quite often. Like I admire founders, right? I was a founder, certainly not probably of your guys' scale in the sense that I have never raised venture capital. And tax avoidance is legal. You can and should avoid paying taxes legally. Tax evasion is illegal. And what I'm getting at here is there's a set of rules. Generally, you can deduct anything that's ordinary and necessary for your business. So, a stipend or a reimbursement for some things as a perk definitely makes sense. The question comes in is whether they are taxable or not. So, phones are a little bit complicated because the IRS usually says something to the effect of, well, you were going to have a phone anyway. So unless it's a completely separate work phone, they aren't as likely to really allow that deduction. Um, things I've seen that are generally like no-goes, iTunes, Netflix, gym memberships. I believe a gym membership is actually a taxable benefit. So if you do something like that, you need to just make sure it gets onto the W-2 and then pay payroll taxes on it. Um, it is totally reasonable and legitimate and smart to try and push as many things that you normally would pay for to a business expense if they are in fact allowed. So hopefully that answered. Transportation again does have specific rules around it. I know that there's some sort of parking and some sort of a transit benefit that you can include, but things like commuting from your home to your office are not deductible. If you're traveling from a business location to another business location, then it would be deductible. Yes, co-working definitely. Yeah, that would absolutely be a reasonable deduction as long as that's like your primary place of business, essentially, is what we get there. Um, What taxes do we have to file if based in New York, being a Delaware C corp? Um, Good questions, thanks. In New York, you have a city tax, a state tax, and then the federal tax. Those are all income taxes. Then you also have the Delaware franchise tax. So you have at least four different tax returns. And then if you have employees, you also have payroll taxes, which composed of at least like two or three different agencies as well, like unemployment, workers' comp, and then there's a state portion and federal portion, FICA, Medicare taxes. And then, okay, did I answer all of that? Sales taxes in addition and separate to those taxes I just mentioned. Where to file all of the at the same time. Um, I would say, working with somebody, a professional like Fondo, or I can make another accounting recommendation to someone like Account Talent. I'll show you at the end here all of our providers that we offer. Unfortunately, not all of them are filed at the same time and in the same place. So by starting a company, you gave yourself one of these jobs is to be responsible for this. I am a big Willie Nelson fan, and I forget how many millions of dollars in debt he was because he, was making a lot of money and he just had his business manager take care of it for him. Well, it turned out that the business manager wasn't and was either taking money or just not paying his taxes. So then Willie ended up owing millions and millions of dollars to the IRS. So unfortunately, it is your responsibility, and the best way I can help you is by pointing you to a professional, competent tax accountant to help you manage this. Again, they'll help mostly with like the franchise and income tax filings. If you have to do something with sales tax, that's generally going to be a separate company, um, which I mentioned ZAMP is one. So, times to file, I will jump there. I think in the next slide I have a time slide, but I cannot stress enough not to just pick the cheapest, fastest one. If you see a guaranteed return, that I would run as far away as possible. Number four is one that I'm pretty committed to is, you know, with the evolution of technology, if you work with somebody who bills hourly, you're basically rewarding them for not innovating. And I think most people don't consider accounting a place to innovate, and I understand that. But, for example, people were using QuickBooks Desktop that didn't have automatic bank feeds. Then we had QuickBooks Online, then we had Zero, then we had like Bench and things like that. And now we're at a stage beyond that where there's not only automated bank feeds, there's automated accruals and automated categorization, which that's a pretty big blanket statement. But my point is, I would generally recommend working with somebody who understands your system, your situation, your entity type, and like I mentioned, I'll share the link that has all of our partners listed out there. I also, number five, don't work with a general accountant. What do I mean by that is if you go to one person and they claim to be able to do everything, I wouldn't trust them. If they clearly tell you that, oh, I have a sales tax person, I have an income tax person, I have, like a valuations person, then I trust them. But if you go to one person who does everything, they're either lying or a unicorn. And there are a few of them out there, for sure. But if you go to any big firm, there's a specialization in corporate tax, there's a specialization in startups. So I would work with a person who really understands. Okay, this is the slide, one of the two that I recommend you screenshot, and I'll share these slides out to you. But you can tell I'm not a graphic designer. I added this star sun thing. I was going to add a second moon, just to be topical and make you remember this slide. These are the basic documents that you need. So your financials, they come from your bookkeeper, your vendor payments, which is related to your W-9s to file your 1099s, ownership changes and owner info, so raising money, adding co-founders, sales by state. So if you're lucky enough to have revenue, payroll by state as well. This is, if I broke it down as rudimentarily as possible, these are the basic things you need. This is what you need to file your taxes. Okay, so this is the Puzzle accountant listing. So puzzle.io/accountant dash listing. I will also, I'll include my calendar in the follow-up email that I send, so you can book time with me to talk through any of these. And then we've actually updated this listing. I think if you go to puzzle.io/accountant dash listing, you'll see more. Like I mentioned, Anchor is a little bit more focused on bookkeeping. They can connect you with people to do taxes. The other firm that it's more of an all-in-one would be like a Fondo. Um, Account Talent, I've sent them probably hundreds or thousands of clients over my career. And so I really trust them. They're more of a focus on tax. Berkland is also listed on our partner page. They're more of a traditional firm, meaning they have like everything you would want, which typically means it's more expensive. So let's see here. Okay, dates. This is the other slide that you should screenshot. So really, I should have just left the April 15th date in, and then October 15th. So dates you need to know about: January 31st, March 1st, April 15th. So I wish I had, wonder if I can do this, gotten rid. You can really tell that I don't use Zoom as much as I use Google. So you can kind of ignore this if you're a C Corp. So April 15th, this is what you really want to anchor towards. March 1st is that Delaware tax filing. And then January 31st is the 1099s, which you need the W-9s for. Remember the W-9s. You need those for everyone. You actually do need them. You should collect them for all of your vendors. It's just the best practice. But at very least, I would make sure that you are collecting them for people that you're sending like a bill pay to. Meaning if you pay them with a credit card or online, you don't really need to um, send them a 1099. International contractors. Yeah, there's a form called W8 Ben, W-8 BEN that you do need to have on file. But it also depends on how you're paying them. So if you're paying them through like a deal or a Rippling as a PEO, they manage that all for you. If you're paying them via like their Stripe account and you're using your swipe, like your Visa card or Brex credit card or Ramp or something like that, you also don't need to track a 1099 or W-9 for that. So it really just comes down to if you're sending them like a PayPal or like a bank transfer, and it's like a manual process that you're doing on your own with that contractor, then you need that W-8 Ben, Ben standing for beneficiary. So they list who they are outside of the country. Okay. Wow, that's unpleasant looking. How do I get rid of all that? Trash. Clear all drawings. There we go. Okay. So there's my email address. Like I said, I'll send you these slides. I'll send you another checklist. I'll send you my calendar. I'll send you the link to the accounting partner pages. I know that was a lot to run through. Hopefully it was helpful. If I helped in some way, could you just post either like a thumbs up or a yes, or it'd just be super helpful. And if you have any suggestions, you can even post them in here, or I can happy to receive any feedback via email. Just my goal is to make sure that you guys know as much as I can share with you. Honestly, the biggest thing is set up an accounting system if you don't have one and work with a tax accountant. But that slide on the documents, I think, is really more tactical advice about what you're wanting there. So with that, I'll hang out here for another few minutes. Okay, what do you collect if the vendor is international, but you would be a wire? I'm almost sure you need to get their W-8 ban, and then you'll need to send them. You don't need to actually send them a 1099, but you need to have the W-8 ban on file to prove that you didn't need to send them a 1099, to prove that they were international as opposed to US. So that is a perfect example of like outside of a system that's managed, so outside of a deal or Rippling PEO. Okay, thanks again for bearing with my COVID brain today and for joining. Like I said, I'll stay on here for a couple more minutes, and if anything pops up, you have my email, and I'll send you a follow-up as well. Thanks again for joining. If you want a demo of Puzzle, please reach out. Happy to help you get set up there too. We do have a free plan. Okay, jumping back to the Q&A. Not seeing any new questions. Just going through the questions and marking them as answered. Thank you for all of your questions. Yeah, I need to find out about the 409A evaluation. I think Pulley is who we use, who we send people to. Awesome. Al Farouk, you can either send me an email or book on my calendar, or even on the website on Puzzle, there should be a book demo button there. Would be very happy to give you a demo. Thanks, Javid. Yeah. No credit card required. You can set up an account and go away, but hopefully you'll see how great it is to have your burn automatically calculated on top of your financials. So okie dokie. Let's see. Daphne, Javid, Patrick, Sabina, Samantha, anything else on your end that I can help with? Okay. Final minute. Daphne, Javid, Patrick, Sabina, Samantha. I'm doing a final check. Awesome. Thanks, Patrick. Okay. Well, I hope you all have a great rest of your Thursday. Reach out with any questions.